prices today surged after OPEC unexpectedly announced crude production cuts to the tune of 1.1 million barrels per day. The move has delivered a fresh inflationary jolt to the world economy. We don't know what the impact on India will be. We'll come to that. The move is seen to have been taken in face of weakening demand. International oil benchmark Brent crude rose as much as 8.4% to a high of $86.44 a barrel in early Asian trading on Monday. Brent and WTI later paired their gains to be up by 5.4% at 84.17 and 5.4% higher at 79.78 dollar per barrel respectively. The sharp gains for crude came after Saudi Arabia announced that it would implement a voluntary cut of just under 5% of its output, which is about 500,000 barrels per day, in coordination with some other OPEC and non-OPEC countries. Russia, a member of OPEC Plus, also said it would extend its existing production cut of 500,000 barrels a day until the end of the year. The move has brought concerns around inflationary pressures back to the fore, adding to worries that higher prices and an aggressive monetary tightening by central bank could tip the global economy into recession. Srikanth continues to be with us. Rakesh is here with me. Rakesh, this looks like a sudden move and it is unexpected, not something that we were hoping for.
Exactly, this has completely come as a bolt, and as I said right in the beginning, we live in a world where we're absolutely connected to the external environment, and oil is so important to us for our economy to not only sustain and grow. So we will have to really see what the impact of it is. It's absolutely unexpected. So when we look at the fiscal performance of the year that has just gone by, we'll have to absolutely factor in these challenges which are known and unknown. So this has come absolutely as an unknown. We were very happy with the oil being a little benign in terms of its pricing. We had done a good deal with Russia. But going forward, how it pans out, the petropolitics, the petroeconomics. Now, the US wanted production to go up. What has happened is that it has gone down. And so this is an additional challenge, especially in terms of the inflation. As I pointed out, and you also pointed out, Shri, and our experts also agree, that inflation is going to be a key issue for India as well. I would request our experts to weigh in on that and look at the immediate impact of the oil shock.
Srikanth, the White House, as Rakesh said, has described this as an ill-advised decision under the current market conditions. It was, of course, hoping that the production will go up. That hasn't happened. In fact, it's gone down. What's the immediate impact on the world market, and what would be the percolated impact on Indian market?
So I think the first thing that we're going to see is the US Treasury bills, the yields are going to go higher, which is going to have a cascading effect of how do foreign investors look at investing into markets like India, be it our debt markets or stock markets. So we could see some action there. Two, I think, will we see a knee-jerk reaction from Russia just to hold on to its existing clientele? Probably, I think if we leverage our diplomacy, we might be able to get slightly more produced than what we are today. But mind you, 85% of our total oil produced is import. So Russia alone won't be able to supply that. We will have to depend on Saudi. And Saudi, I think, OPEC has made a very, very smart move. They played brilliantly on the fundamentals of economics, right? Supply and demand. By just tweaking the production, they're able to get better value for their own buck. And it is expected. They've been waiting very patiently for all this while in the Russia-Ukraine war. It has not happened. We're also going to see, I think, some of the huge inflationary pressures. The CAD, again, the next quarter, the CAD will go up there. It won't be as low as this. Will we have the same sentiment in terms of consumption? Mind you, we're just entering summer and our peak power consumption is going to increase. How do we play that out? Two, also, we are going to get into the next question about how good the monsoon this year is going to be, which means from the perspective of the farm produce and consumption sentiment. Too early to predict. And that's why, as I said earlier, I would not rejoice to start celebrating right away that the CAD is down. There are concerns with this kind of pricing. We just need to keep our ACs running, for the next five months across India. And that's a challenge that we will have with increasing oil price.
Okay. Particularly with respect to India, how far can we see the price hike going? Are we better placed as compared to the rest of the world?
Again, better placed with some parts of the country, some parts of the globe, definitely yes. But the other way of looking at it is, if we have to translate it, we are still in the transition from the fossil fuel to the green transition. It's a long way to go. So right from our public transport to the private vehicles, we still are consuming fossil fuel, petrol and diesel. So the bill will impact us in the short term. We really don't see citizenry benefit where we say that, hey, listen, oil prices have gone up, so let me stop using my vehicle. We don't do that. So probably a small blip of it. And three, we are just moving into a kind of what I call as the experience economy. Everything we want to experience, be it Swiggy, Zomato, everything is sitting where we are. And that is not going to change, right? I mean, we're just going to consume more and more of everything, services. And everything needs to be powered by something. And that's where my fear is inflation in the short term could go up. And how does it impact our consumption? Again, I think consumption is not going to go down just because oil prices have come up. If it's an impact on food, oil, cooking oil, I think we might see some slowdown of take. Luckily, the festive season is quite some time away. So that's a relief that I would find from this pricing point.
Absolutely. Before I let you go, what alternatives do the global economies have in order to keep prices under control at this point in time? Because this is sudden, as we discussed. What alternatives do they have on the table?
I think there is no alternate. I mean, if they can make peace with Russia and solve Russia-Ukraine one, I think we're getting better level playing field. But I think OPEC, being the largest, as Rakesh alluded to, even the US production is not taken off. And I think this is truly the test for the global economies which preach developing nations like India about green transition, right? I mean, how many of them have actually transitioned to green energy, green sources of living? And I think this is a wake-up call for all of us. Forget only the pricing power, but also the real living we will need to transition. Short term, no, I think we're going to continue having pain. The long term, who knows? I think we better learn lessons from these.
Srinath, if you can wait a while, I'll just get Ashwini to respond on this OPEC price rise. Ashwini ji, can you just see the impact that you possibly have in India and globally? What are your assessment of this unprecedented decision?
I think it's not a very wise move on the part of the OPEC countries who have cut down because all over the globe we see a declining trend for the fossil fuels. And the sooner they sell it off, better it is. They have a huge reserve of oil. They should not reduce the production in any way. It's not going to help them in the longer run. Yes, in the short run they may get some dividend in the form of higher prices, but in the longer run, US is doing a right thing by increasing their production of crude oil, and we will have to look at Russia, how Russia responds. But in any case, we are better placed as compared to the rest of the world, especially the Western world, because we are getting crude oil at much cheaper prices as compared to the West. So the impact will be there on India, but it will be minimal. It will be less than what other countries will face. This is one thing. Second is that future of fossil fuels is bleak in the sense that we are going towards more and more towards the electric vehicles, and I think in the next 2, 3, 4 years we will be shifting at least 50% of our demand to the electric vehicles. So we will have to see, but yes, in the short run, we should be worried about the inflation coming in. But RBI will have to treat a balanced path in the sense that they should not get swayed away with the inflation targets and other things, because what is important is that we must not get our growth impacted adversely by raising interest rates. We must keep the interest rates at a lower level because we must give a chance to growth, because all these, whatever is happening, whether it is digital infrastructure or it is the other kind of infrastructure being built, or the more new investments after production linked incentive schemes and the orders coming in, new kinds of commodities being produced, especially semiconductors and solar panels, and more and more of
So would you
manufacturing
advise
is
the
happening
RBI
in
governor
India.
not to raise the interest rates next week?
I would say that because today, if we look at the inflation right now, uh, it is obviously under control as compared to what it was in the previous months. So my advice to the monetary authorities would be to hold it for some time.
Good. Srinath, coming back to the domestic situation, what's your forecast on the rate situation? I mean, you agree with Ashwini ji on RBI not going for a rate hike again, or are you there, or we lost you? No, you're there.
No,
Thanks.
I'm there. Yeah. So I mean, while I agree with him in principle, but I think the reality is RBI does have another KPI, right? I mean, or KRA. Their KRA is also being the debt manager for the government of India, and government of India has not diversified sources of borrowing. I mean, nearly 45% of the entire Indian domestic market gets swept away by government of India. If only they diversify that, which means that the rest of the corporates or the retail borrowers in India would have access to that. So I think from the long-term perspective, we will have to relook at our entire banking sector. Indian banking sector is one of the few where we actually lend to the government and the corporate borrowers, whereas in the Western world, the banking sector actually lends to retail, individual, and MSME and SME borrowers, while the corporates have the bond market. Here, that's completely warped. And I think over a point that need calls for a structural change where the government and the corporates go to the bond market and tap into it, while banking allows for the growth in the actual grassroots economy. So here, it's a flip side where under the name of priority sector lending, we have kind of bucketed the growth and limited the growth. And I hope that we'll take care of it. Short term, I think RBI won't have an option but to look at rate hike to balance inflation, to balance availability of debt. I think that's a challenge they will face this week.
Last question before we let you go. This entire issue about private sector kept, not investment not perking up. The finance minister has made a public appeal. Even the prime minister has indirectly been talking about it. Now the election era is there. There's one view that they'll be even more cautious. What requires to really perk up private sector investment, which is linked to jobs, which is linked to manufacturing, which is linked to overall investment, climate being, in the right quotient?
So I think while all of those are fundamentally there, if I were a business, if you look at the top Indian businesses, they've diversified into not just India being their domestic market or earning market. They've also started going abroad. I mean, these are multinationals which are Indian in nature but based out of India, but they're multinational. Some of them have over 50% of their revenues and profits coming from global markets. I think in a for-profit enterprise, it's a compulsion, economic compulsion for them to de-risk and de-grow. If let's say European market is going to throw tax breaks and incentives for them to attract their investments, they will. And India, they know the volumes are there, but the pricing is still not available. So we will have to look at India not just as investment or consumption market, but also as an investment market. And here, I think, which is why I said earlier, the states have to compete in offering the right investment climate, the right breaks. It's not about giving land free or just giving tax break free. How efficient and ease of doing business, how quickly can they go? I think that's a reality.
Okay.
I think this year, the Indian businesses will still continue shopping for M&A globally.
Okay.
Why should they not? I mean, if they're going to buy assets for cheap, for free, almost for free, and if they can use their rupee to do that, I think they will be far more pragmatic. And I think that their stock market valuations will increase because of that, not because they opened one more factory in India. And that's a reality that for-profit enterprises face.